Every day, millions of traders open their platforms with hope in their chest and confidence in their plan. They've studied, they've watched hours of videos, they've listened to people who sound successful. Some of them even paid for that so-called secret indicator that promises precision and consistency. And yet, despite all that effort, the story keeps ending the same way. Red numbers, shrinking accounts, and a quiet question they don't want to admit out loud. Why does this keep happening to me? Here's the part most traders don't want to hear, but desperately need to. You're not losing money because you're lazy. You're not losing money because you're stupid. And you're not losing money because you picked the wrong indicator. You're losing money because you're chasing something that doesn't exist. A perfect signal, a golden ticket, a magical moment on the chart that removes uncertainty and guarantees profit. Deep down, almost every struggling trader believes this fantasy. They believe that if they just find the right setup, the right indicator, the right alert, trading will finally feel easy, clean, safe, certain. That belief is the real problem. Think about how this starts. A loss happens, or worse, a missed move. You watch price run without you, and suddenly the pain isn't financial anymore. It's psychological. It's ego. You feel behind. You feel late. You feel like everyone else gets it, and you don't. So what do? You search, you tweak, you optimize. You download another indicator. You adjust your RSI. You wait for that MACD cross. You watch a video that promises 90% accuracy with one simple trick. You see AI bots on TikTok and Instagram claiming they print money while you sleep. And for a moment, it feels good, because certainty feels good. But certainty is dangerous, because while you're busy chasing signals, you stop thinking, you stop reading the market. You ask the only question that actually matters: why should price move from here? Most traders don't realize this, but signals are not an edge. Signals are just information, and information without context is noise. Imagine driving through a city. You see a green light. That's a signal to go. But what if your car has no fuel? What if the road ahead is flooded? What if there's a massive sinkhole just past the intersection? That green light didn't protect you. It didn't guide you. It just told you to move, blindly. That's exactly how most traders use signals. They see a buy arrow in a collapsing market. They see a breakout signal after price already ran. They see confirmation where risk is actually highest. And then they're confused when the trade fails. Here's the brutal truth. Markets don't reward people who react to signals. Markets reward people who understand context. Most losing trades don't fail because the signal was wrong. They fail because the trader ignored where that signal appeared. A buy signal in a strong downtrend isn't opportunity, it's liquidity. A late breakout signal isn't confirmation, it's exhaustion. An indicator lighting up doesn't mean smart money is entering. Often it means they're already leaving. This is where psychology quietly destroys accounts. After losses, traders crave relief. After missing moves, they crave redemption. After watching others post wins, they crave validation. So they don't enter because the trade makes sense. They enter because the signal gives them permission. Permission to feel safe. Permission to stop thinking. Permission to blame something else if it fails. But professionals don't trade for permission. They trade for positioning. They don't ask, is there a signal? They ask, who is trapped here? Who is late? Who is emotional right now? Because price doesn't move because an indicator fires. Price moves because people are forced to act. This is the difference almost no one teaches. Retail traders chase signals. Professionals anticipate behavior. The more obvious a setup looks, the worse the reward usually is. By the time a trade feels comfortable, by the time everything lines up perfectly, risk is already inflated and upside is limited. That's why professional entries often feel boring. quiet, unexciting, sometimes even uncomfortable, not because pros are reckless, but because they understand where risk is lowest, not where excitement is highest. They understand the story the market is telling. Before they ever look at an indicator, they already know the environment. They know whether the market is trending, ranging, or transitioning. They know where liquidity sits. They know what higher time frames are doing. They know what would have to happen for their idea to be invalid. Indicators don't give them confidence. Context does. This is where most traders finally need to shift. Stop asking, what signal do I need? Start asking, what narrative is playing out? Why would buyers step in here? Why would sellers get trapped here? Why does this level matter now? Once you understand the narrative, signals become optional, secondary, sometimes unnecessary. And here's the part that really changes everything. You don't need to master every market condition. The market offers trends, ranges, volatility, news chaos, dead sessions, explosive sessions. Trying to trade all of it with every signal is a guaranteed way to stay average forever. Professionals don't do that. They choose one environment, one behavior, one story. Maybe it's pullbacks in strong trends. Maybe it's mean reversion in tight ranges. Maybe it's liquidity grabs around key levels. They ignore everything else, not because they're limited, but because focus creates depth, and depth creates intuition. When you trade the same environment repeatedly, you stop guessing, you stop chasing, you start recognizing when something doesn't belong. And this is where real risk management finally becomes possible. When you understand context, your stop loss stops being random. It's not based on fear. It's not based on hope. It's placed where your idea is objectively wrong. That's real control. You're no longer trying to avoid losses. You're controlling damage. You're protecting not just capital, but mental clarity. And when charts are clean, decisions get quieter. No signal overload, no emotional rush, no constant second-guessing. Just patience, clarity, and execution. So now the question is simple. Will you keep hunting signals, chasing certainty, and reacting to charts after the move already happened? Or will you make the shift? Will you stop being a signal chaser and start becoming a risk manager who understands context, behavior, and narrative? Because trading isn't about being fast, it's about being prepared. It's not about pushing buttons, it's about understanding the game. Master the context, manage the risk, and stop chasing what was never real to begin with. If this message hit you and you're ready to simplify your charts and your thinking, drop the word "traded" in the comments. I'll show you exactly how I strip everything down to focus on context and high probability opportunities. Trade smarter, not louder. I'll see you there.